Let's talk about one of the most misunderstood tax forms out there, IRS Form 8949. If you sold investments in 2025 and wondered why your tax software suddenly got serious, this form is usually the reason. Form 8949 is where the details live. It's not the summary, it's not the final answer, it's the behind-the-scenes explanation of every investment sale you made. Think of Schedule D as the scoreboard. Form 8949 is the play-by-play. Anytime you sell a capital asset, the IRS wants to know the full story. A capital asset can be a stock, a bond, a mutual fund, an ETF, cryptocurrency, or even certain collectibles. The moment you sell one of these, something tax-related happens, whether you realized it or not. Form 8949 exists because investment reporting is messy. Some brokers report everything perfectly. Some report only part of the information. Some transactions never get reported to the IRS at all. This form is how you line up your version of events with what the IRS already sees. The form starts by separating transactions into two big buckets, short-term and long-term. This split matters more than most people realize. Short-term transactions are assets you held for 1 year or less. These gains are usually taxed at your regular income tax rate, the same rate that applies to wages. Long-term transactions are assets you held for more than 1 year. These often qualify for lower tax rates, which is why those purchase and sale dates suddenly become very important. Sometimes basis is simple. You bought a stock, you sold it, end of story. Other times it gets complicated. Gifts, inheritances, wash sales, and corporate actions can all change what basis really means. That's one reason Form 8949 exists in the first place. Then come the adjustment columns. This is where Form 8949 really earns its keep. Adjustments are used when the numbers don't tell the whole story. Maybe your broker reported an incorrect basis, maybe part of a loss is disallowed, maybe a wash sale applies. Each of these situations gets handled here. Instead of writing explanations, the IRS uses adjustment codes. Each code signals why a change was made. This keeps the form standardized and easier for IRS systems to process. Once adjustments are applied, the form shows the final gain or loss for each transaction. This is the moment where everything comes together. A positive number means a gain, a negative number means a loss. One of the most common adjustments you'll see on Form 8949 involves the wash sale rule. This rule applies when you sell an investment at a loss and buy the same or a substantially identical investment within 30 days before or after the sale. When that happens, the loss is usually disallowed for now and added to the basis of the replacement investment. Form 8949 is where that math gets recorded. Cryptocurrency also shows up frequently on this form. The IRS treats digital assets as property, not cash. That means selling crypto, trading one crypto for another, or using crypto to buy something can all trigger reportable transactions. Each one belongs on Form 8949. What Form 8949 does not do is calculate your tax. Its job is documentation. Once all transactions are listed and totaled, those totals move over to Schedule D. Schedule D takes the combined short-term and long-term results and figures out the net outcome. If gains outweigh losses, you may owe tax. If losses outweigh gains, some of that loss may offset other income, with the rest carried forward to future years. Not everyone has to file Form 8949. If every transaction was reported on a Form 1099-B, with correct cost basis and no adjustments are needed, the IRS allows totals to be reported directly on Schedule D. Still, many taxpayers use Form 8949 anyway because it reduces mistakes and creates a clear paper trail. Form 8949 becomes especially important if you traded frequently, used multiple brokers, dealt with inherited or gifted assets, or worked with cryptocurrency. These situations almost always require more explanation than a simple summary can provide. The IRS often matches reported proceeds against tax returns. If proceeds appear without corresponding gains or losses, it can trigger questions or notices. Form 8949 helps prevent that by clearly showing how each number was calculated. By the time you finish Form 8949, every sale has been accounted for, categorized correctly, and adjusted where needed. When the totals flow to Schedule D, the hardest part is already done. In the end, Form 8949 is not just another tax form. It's the detailed record of your investment activity for the 2025 tax year. When it's done carefully, it supports your tax return, reduces the chance of IRS issues, and makes sure your gains and losses are reported exactly the way they should be. Before wrapping up, it's important to say this clearly. While Form 8949 may look like a list of numbers, filing it accurately can be complex and highly nuanced. Small details like holding periods, cost basis adjustments, wash sales, inherited assets, or cryptocurrency transactions can significantly change the outcome of your tax return. Tax laws evolve, reporting rules vary by situation, and a single mistake can lead to notices, penalties, or delays. What seems simple on the surface can become complicated very quickly, especially for active investors or anyone dealing with non-standard transactions. Because of this, it's often wise to seek professional tax advice. A qualified tax professional or CPA can help ensure Form 8949 is completed correctly, that gains and losses are reported accurately, and that your return aligns with current IRS requirements. Think of Form 8949 not just as paperwork, but as documentation that protects you. Getting expert guidance can provide clarity, reduce risk, and give you confidence that your taxes are filed the right way.